You're watching the Business Channel, creating business class programmes. Joining me now is Claudia Rose, Sales Director for Lex Autolease, which is part of the Lloyds Banking Group. Can you tell me a bit about the company?
Lex Autolease is actually the largest vehicle management and leasing company in the UK. We came together about 2 years ago from the merger of HBOS and Lloyds Banking Group, and we now look after about 300,000 vehicles on the road. That is actually 1 in 5 of every car, and therefore we're able to provide a wide range of services to corporate and SME customers across the marketplace.
Now, we're going to talk today about salary sacrifice, your product. Now, what is that?
Salary sacrifice is a fairly new product in the market, but it's really aimed at any employee within an organisation that would wish to have a new car, and it's given to them through the ability of them sacrificing a proportion of their gross salary and therefore benefiting from a company car experience at highly discounted rates.
So why is this better than they just buy their own car?
Well, it's an opportunity to get a brand new vehicle at highly competitive rates, and it's particularly good because the employee has the opportunity to make a deduction from their salary, their gross salary that is, thereby reducing their tax that they pay in terms of their income tax. They do actually have to pay a benefit in kind tax, which is similar to all company car drivers, but with the right vehicle selection that can be considerably less.
So that's a lot of benefit for employees. Is there any benefit for the employers in this?
Absolutely. The employer saves the national insurance that they would have paid on the proportion of the salary that's been sacrificed. And although they do have to pay national insurance on the benefit in kind element, that's usually a considerable less amount. In fact, if you were to run a fleet of about 500 salary sacrificed vehicles, a company could expect to save about £250,000 over a 3-year period, which is quite a nice benefit when actually you're providing a better package for your employees and something that they're going to enjoy and use.
Do you find that this is a particular benefit to manufacturing or any other particular sector that is going for this?
I think there are lots of sectors that this can benefit in, but I think it's particularly good within the manufacturing sector, as there are a large number of employees that perhaps are not on terribly high salaries, and this is a really great way to boost the benefits package for those individuals.
Now, lots of companies now are trying to be green. How does this fit in with that agenda?
It fits in absolutely perfectly. In terms of making this scheme the most effective it can be, if companies select low CO2 vehicles, it will attract the minimum amount of benefit in kind tax and national insurance for them to pay. That then allows their drivers to save money and also them to save money in terms of their national insurance contributions, whilst lowering the overall CO2 element of their fleet. It can be particularly effective for those individuals who go on company business and perhaps would have historically used their own cars, because they're actually reducing the emissions that that fleet are actually producing.
And low carbon doesn't necessarily mean hybrid?
Not at all. There are absolutely loads of cars now that are really low in terms of CO2, a lot of diesels and a lot of lean petrol burn vehicles that actually offer a fantastic opportunity to get a really good value vehicle and actually minimise cost and environmental impact.
Now, people might think that there's a lot of admin involved in a scheme like this. Is there, and who does that work?
There's a little bit more than you would get in a normal company car fleet just in terms of the setup, but we would actually help companies through that process through our consultancy to ensure they get the right scheme set up for all employees within their organisation. Once the scheme's set up, we actually take over in terms of delivering the driver quoting online through our quoting portal. We do the ordering and delivery, we manage all of the paperwork for the company, and of course we run all of the in-life services for the driver. So the drivers get all of their servicing, their roadside recovery, and we even offer some services like collection and delivery and a free valet every time they get the car serviced, so it's really a great deal.
And how can companies maximise their company car offering whilst also keeping an eye on cost control?
I think in a traditional company car scheme there are great opportunities now to really reduce costs and provide a great scheme for their employees. And this again focuses around looking at the whole life cost of a vehicle. Approximately a third of the cost of running a company car fleet is actually the fuel costs, and we've seen those escalate in the last couple of years. By selecting vehicles that provide really good fuel economy, low CO2, they both reduce the cost of the vehicle and provide a great benefit to the driver. And the good news is a lot of the premium manufacturers have been very quick to take up on this point. So there's some really fantastic brands and really fantastic models that are now appearing much lower down the company car fleet list, provided you look at it on this basis.
Claudia Rose, thank you very much.